Well, good morning, everyone. Welcome to our Wednesday morning trading session. Yesterday was quite the roller coaster ride, wasn't it? Market plodding higher. Here's yesterday's session. Plodding higher, making a major reversal going into the close. Wiping out all those stops that were just above the highs before sending the market screaming lower. And that's where it continued to go for most of the overnight. A little bit choppier trading during the overnight session. But that's what yesterday was all about. If you haven't seen one of those before, well, you've just been educated. That was pure and simple, just a stop running day. We picked up a couple of dollars yesterday. I would not have anticipated the market to make such a major reversal, but I suppose that's the point. All right. Just looking around here at the other markets, crude oil also bouncing around quite a bit after a bit of a little bit of an uptick yesterday. Today, of course, crude inventory in about an hour's time. And I'm wondering whether we're going to try to get into that opening gap. We do have a little bit of a reversal building. We've got a bullish buy signal here on the hawk. That's our first micro-macro cross. The Raptor also gave us a trend change signal here a minute or two after the open. Now they're kind of fighting the top end of the trading range. I almost think the safer trades will be to the short side this morning, but like I said, that big opening gap is a little bit of a concern. Here the Eagle has printed a with trend signal. This is our green bar sell. It's currently against the ATR. You could, however, use this bar here for a second push opportunity. And it also seems to be building a rule of three. So very conflicted market. See here the Eagle comes now with this rule of three signal. The rule of three signal is our counter trend signal on the Eagle. And what it does is you have to have a trend, okay? So anytime you're looking at a counter trend signal, remember that you first have to have a trend in place. After that, you need to have a test of the extreme. In this case, the extremes are the low. So here's our trend. Here's a retest of the low. And now it looks as though the market's trying to head higher. With the rule of three, you're going to produce 3 signals against the direction of the trading band. So right now the trading band is bearish. Ideally we'll be looking to sell, but we've produced 1, 2, 3 signals against the band. You could also count this one. Sometimes we'll get 4 signals. Occasionally we will only get 2. But we will always, always, always have a trend followed by a test of the extreme. Without those 2 components, it is not a rule of 3 signal. That's important to remember. So we'll see how this rule of 3 signal plays out. I suspect we're going to get a little bit of an uptick here. I think traders are at least going to try to get into that opening range gap. But it's still very, very early. You don't need to rush into anything. And like I said, when in doubt, it's probably safer to stay on the short side today. The other tools you can see we're just kind of waffling back and forth. Perhaps a better entry would have been above this little swing high right here at around 58.88. Good news about this trade, stops are below the lows, so I will definitely know if I'm on the wrong side of this trade. Rick says, hi, I'm new. Well, hi, Rick. Rick asks, I'm not sure what to do. I'm on the 5 tick on the NQ. What do I do to get it on the 8 tick? All right, I'm assuming here you're working with the Raptor. Your brick size here, you see if you hover your mouse over it, you see how it says data series underneath? So what you want to do is you want to go to your data series tab. Now there's a couple of ways you can do that. This is data series, or you can right click on your chart and go to data series. The data series allows you to structure your chart the way you would like it to be. So your brick size, if it isn't already set at mean Renko bars, this is where you can set it. The default brick size is 5 ticks, so you'll want to change that to 8. Days to load are fine. If the session template isn't already on the default 24.5. It may say instrument settings, which is fine. These are arranged alphabetically. So you go down here, default 24.5. You're probably wondering what's the difference between 24.5, 24/7. There's a little session, a few hours on Sunday morning, which would give you a 24/7 session. Nobody trades it. It kind of skews some of the numbers, so I recommend staying with the 24/5. And then you just apply your changes and you're good to go. And that will reformat your chart for an 8-brick chart. All right, we've got the market pressing lower now. We did get a trend change signal right here, our cloud crossover signal. And I think I'm going to get tagged here on this eagle trade in a second. Unless we get some buyers showing up. No, didn't think so. That's the problem with a counter trend trade. Counter trend trades always more difficult to do. Okay, well, now that we've seen that, let's see about waiting for a with trend position. You see, there's two problems with doing a counter trend trade. The first is obvious, I think. You're going against the trend. You're going against the flow. Counter trend trades tend not to have the follow through that a with trend position has. That's problem number one. Problem number two is that if you get stuck in a counter trend trade, let's say we did this soft edge buy here, this number 2 signal, and we're going to pretend for a moment we did not hit our profit objective. The problem with the counter trend trade is when you get a with trend signal, you're already stuck counter trend, right? So sometimes it can end up handcuffing you. Okay, Rick says, I can only get my chart trader to come up. I don't know how to pull up the trading platform built to assist in the Raptor. I think you're referring here to the trade manager. Well, we're going to assume that your trade manager is installed. If not, you're going to need to contact Ben about installing your trade manager, or you can go to the Indicator Warehouse website and download it. To install it on your chart, you'll go here to your control panel, down to utilities, and import your NinjaScript. But we're going to assume that everything is installed, you just don't have it on. So to turn it on now, your trade manager is what's called a strategy. It's a trading strategy. It's not an indicator, so you're not going to find it here in the indicator window. You will go to your strategies window. So right-click on your chart, go to strategies. Then Trade Manager should be in your strategy assortment. Double-click on it. Before you apply it, you can actually make changes to it. So if there's things you would like to change, for instance, your invalid stop by default will be 10 ticks. I changed mine to 30. You can select a default stop strategy. This one's kind of a big deal. Your risk volatility percentage. This will be under account protection parameters. Your risk volatility is probably set at 1%, which will be fine if you're trading a bigger account. Otherwise, you'll probably dial it up to 2% or more. Click tick targets. This just means, do you want your profit target preset? If you do, you'll set it at ticks, and the recommended profit target is 20 ticks for the Nasdaq. If you're trading the Nasdaq, $100 is our swing target. I also have mine set up to split my trade 50-50. So my target 1%, if you want to be all in, all out, set that to 100. I have mine set at 50-50. After you've made a couple of changes, it's a good idea to go to your template manager and highlight the save box. Just type in a name and press enter. Call it whatever you want. Call it, you can call it Rick. I think I called mine, what did I call mine? Oh, I can't do it because it's on. I think I called mine Raptor. Press enter, and then it will save it. So next time you load a fresh chart, you don't have to go through all this. You can just load the trade manager. You'll want to, yeah, that's about it. If you're trading live money, you're going to want to make sure your account, no, it will read your account balance. Sorry, you don't need that. You used to have to enter your account number. And that's it. So then you can apply that, and voila, you should have your trade manager on your screen. Okay, the buyer is getting a little bit more aggressive here after that earlier breakout to the short side. As I mentioned, it's always easier trading with trend on a day like today, or any day for that matter. But we may see another attempt to rally the market here. The nice thing again about this type of setup is, you know, because the market is potentially bottoming, we can usually get in a little bit earlier. Here the hawk already producing the first micro-macro cross higher. The Falcon giving us a trend change signal at about the same time that the Raptor gave us that counter trend signal. All right, so for the Raptor now, we're working a very, very early cloud crossover to the upside. This continues lower, we should produce a hard edge bounce signal. That's the number 3 signal. All right, let's see. Come out. We got a warning dot. Okay, the hawk now into yellow bars. That's not going to qualify for a 4-arrow consolidation, so that's kind of spoiled the hawk signal. You can see here the eagle already producing a green bar sell off the hard edge. Whenever we encounter the hard edge, we always anticipate a reaction, right? Here, the falcon working a possible late filter entry signal, so that's bullish. And here on the raptor, we're now looking for the market to bounce off of this hard edge, and that will produce a cloud crossover signal. There it is. Now, this is a very early cloud crossover signal, and I'll explain the difference here in a moment. I'm just going to punch in a buy order now because they're running away on me a little bit. I'm going to pull my stop. Okay, so the cloud crossover signal, which is the number 1 signal, occurs when your clouds change direction. So we have clouds that are bullish here. The fast cloud is stacked above the slow cloud. Then they change direction, they cross over, and we produce a number 1 signal. Now with the cloud crossover signal, there's 2 components that we look for. The clouds changing direction is 1. The second component is we get a little bit of a pullback. Sometimes this pullback is only 1 bar, but it's still a pullback, and then we get the market producing our signal. Now you'll notice here, we didn't produce the cloud crossover signal. How come? Well, because the clouds didn't cross enough yet. That's why I called this the early cloud crossover signal. It has all the components of a cloud crossover, but as far as the programming is concerned, it hasn't met all the criteria. But yet visually, you can still see that this is a cloud crossover. Right? We've got the clouds changing direction, and we've got this little pullback in here. So that's the cloud crossover signal. We've hit the break-even trigger, the auto break-even, and don't don't flinch yet. Get up there, you so-and-sos. Come on, just a little push. All right. Okay, now we're going to get a proper cloud crossover here in a moment as well. In other words, now that these clouds are crossing, we can anticipate another pullback, right? Because we're going to produce a number 1 signal somewhere through here. The choice now is yours, whether you want to try to ride out the swing or if you just want to take your profit. You can see we've got an additional 150 in open profit, give or take. let your account be your guide. Some people have the temperament to ride out a swing. Other people can't stand to see the market trade against them. There really is no right answer here. The only one that's right is the one really that's right for you. I'll try to ride this one out. I'll see whether or not we can't get into that opening gap. If we're not going to see the market trade up at least a little bit. We've got enough out of this trade currently for an easy scalping profit, or even our swing profit, and then some. All right, so here's the pullback. The clouds have now fully crossed, and you can see the Raptor producing the cloud crossover buy signal now. So I knew we would get the signal eventually. Now that we have it, and once the market resumes the uptrend, I'll become a little bit more aggressive with my stops. I'll switch to a little bit more aggressive stop strategy. You can see we're stuck here on the median line. Let's get through the median line from our support and resistance suite assortment. All right, I'm not going to let any more of that profit get by me. I'm going to use my ATR strategy to at least lock in some of that profit. And hooray for me. Made that first swing. Let's see if we can hold on long enough to get through the second. Nope, they're going to give me a little tap here now. I still think we're going to see the market head a little bit higher. I'm just not sure whether I'll be able to hang on here. Before they do a little bit of a retracement first. Okay, not a bad little trade there. Just making a couple notes in my trading journal. Rick, you're going to need to talk to Ben. Um, uh, the trade manager does not place orders automatically, so you've got maybe conflicting strategies or something going on your computer. It's nothing serious, but Ben's going to need to take a look at your computer screen and actually get that straightened out. So shoot an email to Ben and he will get that resolved for you. All right, so here we got the sellers taking their kick at the can now. Pulled the market all the way back to the hard edge. Whenever we encounter the hard edge on both the Eagle and the Raptor, we should anticipate some sort of reaction. And we'll see whether or not the buyers can muster a rally from here. If they're going to push back or if the sellers are just going to continue to move the market lower. Okay, so here the eagle now producing a red bar buy signal. That's a high probability signal for the eagle. Can I cover it down there? Ooh, I can. And we're also getting a little bit of a second push entry opportunity. The second push simply means that once the signal has tripped, we allow it to flinch, to move away from the entry parameters, and then we can enter above the current limit of that bar. So the hawk definitely looking bearish. The falcon gave us a very quick trend change signal. I do believe that coincided with this signal right here. The raptor should give us a hard edge bounce signal as well. That would be our number 3 signal. Lots of opportunities here this morning. It's a busy day. We're spending a lot of time around this 5883 area. That's going to be a number we want to bear in mind. For the next couple of days, it seems to be market sensitive. Darn it, I was looking at my crude oil chart and I missed my number 3 signal here on the raptor, but you can see how we were anticipating it. Well, I've already got the eagle trade in. We are getting a first micro macro cross higher as well. If you're trading the hawk, here's an opportunity at a first. Taking too long to explain things. Maybe I should put the order on first and then I'll explain what I'm doing. Okay, the eagle should get up here and find our profit target. There we go. Hooray for us. And the hawk also found its scalp target on that little rally, and the raptor here would have had no difficulty finding its profit objective either. So 3 pretty solid signals across the board. as the sellers try to push into that, or pardon me, the buyers try to push into that opening range gap. Well, it just shows you the balanced nature of the market. We've come back now with a soft edge sell signal here on the Raptor. It is right into the hard edge, which is a little bit trickier to take because the hard edge tends to be our profit objective for this particular signal. We're also getting a red bar buy here on the hawk, so we should anticipate at least one more push higher to retest the high. There it is. And if that fails, this is also our counter trend signal in the hawk, and you can set up to short it. Or you can simply use it as an early warning that your trend may be coming to an end. In this case, the uptrend. Where's the next resistance line? 59.10 is the primary resistance. That could be a little bit of a reach. We're having some difficulty here at the median line. You can see it's coinciding with the high of the morning at around 58.92, 93. Rick having a couple technical difficulties. Has the screen locked up for anyone else? Okay, here's the hard edge buy now on the Raptor. I'm going to try this one. Risk it down there. Let's see if the buyers don't give it one more go. Well, they slipped me a tick too, stinkers. See if I can get my tick back. There we go. Yeah, okay, thanks, Mark. Mark says no screen lock up here, but sometimes it's locking up. Yeah, good idea, Rick. I was going to suggest you try to log out and come back in. All right, here we go. Come on, get up there. So I think I'll leave my break even where it is. I thought about bringing it in to the high of this bar. You can see with my logic counter, I can tell you where the bar is going to finish. I almost thought about bringing it in so if the bar finishes on the high, I'll take the break even. We may have to hang on here for a little while. All right, just nursing this trade. I'm hoping it's going to turn into a double pullback. The double pullback occurs when the market pulls into the cloud twice here on your Raptor, and it comes out and produces signals each time. So this would be pullback 1. This now pullback 2. We'll see whether they come out here and produce yet another buy signal. That would be a double pullback. It's not labeled as one of your Raptor signals, but it's still something to keep a lookout for. And we're still kind of sideways across the board here, aren't we? We'll stay with the Raptor trade. All right, so you can see another hard edge buy. So we now have the double pullback signal. And hopefully they will continue on to my profit target. Come on, you can do it. Get up there. The problem is we've got a little trend line resistance right there. It's causing some selling every time the market pokes up above 58.90. We can always try begging. Please, please go higher. See, sometimes it helps. If they don't rally soon, I'll have no choice but to bring out the magic mouse and actually force the market higher. I don't like to do this for my own benefit, but here we go. We're just going to move the market up with the mouse. There we go. There we go. Get going. Come on. Keep going. Get up to the break even. You can do it. Francisco says, I tried that, but they don't hear me. The magic mouse is still in beta. Okay, Rick says my crude oil screen is not like yours. It's because I'm watching the Nasdaq. If you're on, I'll pull over my crude oil chart here in a second. There's crude oil. Does that look better? Oh, we're up to the break even. Come on, just give me the extra tick. You know you want to. Just get up there. Yeah, the Magic Mouse, not for sale yet. It's still in beta testing. Come on, get up there. Oh, don't you dare tag me at break even after all that. Oh, so they tagged me at break even anyway. Scoundrels. All right, time to put that one back on the shelf. Oh, are they going to make one more push now that they tap me out? All right, well, while they're figuring out what they're going to do here on the Nasdaq, let's take a look here at crude oil. Crude inventory coming up shortly. I believe we still have inventory today, don't we? Yes, crude inventory coming up in about 5 minutes time. Oh, actually not, about 3 minutes time. All right. There's several ways you can trade the crude inventory report. One way is to use your OCO order and just bracket the range for a breakout. The other way is to let the market absorb the inventory report and then bracket the ranges. Either way, it's a very aggressive strategy to trade the inventory report. So what I'm going to do is I'm only going to allow them 2 ticks slippage, and I'm going to look to buy. I'll use a buy stop limit, and I'm going to sell below the low of the morning. So here's my daily range. It's very, very tight. I'm going to short the low of the morning. I'm going to buy the high of the morning, and I'm going to go with a very aggressive stop strategy. My parabolics, it's not aggressive enough. That's too close to my entry. All right, I'll give them a couple of extra ticks on the buy, a couple of extra ticks on the sell. You can see as far as the Raptor is concerned, we are producing a cloud crossover signal. It hasn't triggered yet, but the Raptor looking a little bit more bullish. Now, as I mentioned, this is a very, very aggressive strategy for crude oil. And you should only do it if you're prepared to get stopped out. Really, it's that simple. All right, inventory report should be coming out in about a minute. And the idea of setting this bracket as well is that I don't get brought in before the inventory report releases. I don't want my entry orders so tight that I get tagged early. And with the tight stops, everything's enabled. Yes, okay. With the tight stops, I'm hoping that if the market does make a violent move, I'll be able to capture a lot of that move before it reverses, which it does have a tendency to do. All right, they filled it to the short side. We've got our stop in play. I'm going to hold my stop. Yeah. See, that's the joys of trying to do a crude inventory report. But now that the report has released, we can try it again on the range that's been established after the report release. So we know this is the low down here. Oh, it looks like the high is right back here. So this is the alternate way of trading the crude inventory report, is you allow the report to release to set a range and then to buy and sell a breakout accordingly. Not much of a range so far, is it? All right, let's see if, oh, I need to enable a stop in order to have my stop strategy in play. There we go. No, I don't want to roll my stop just yet. Come on. There we go. Well, this seems to be par for crude oil of late. It's really Dudsville. The market thrashes about a little bit, but doesn't really go anywhere. We'll throw that back on the shelf for now. Let's see if there's anything interesting going on in the Nasdaq. Oh yeah, they're going higher once they tag me at my break even. This little tag out here, and now they're going to rally up. Stickers. I was just about to point out this first micro-macro cross as well, so there was an opportunity. Trend change or trend line touch, however you want to view it, here on the Falcon, and of course the hard edge bounce here on the Raptor, and a couple of hard edge bounces on the Eagle. Okay, Rick's having some issues here. And Ben, good news, Rick, is Ben's the guy you need to talk to. But in the meantime, do this. Right-click on your chart and email me a screenshot. And you can email it to Eric at, here, we'll show you. Email it to Eric, E-R-I-C-H, at supportandresistance.com. Except you got to put that in the to, not the from. and then I'll take a look at what it is you're seeing. Okay, a little bit of a flinch here now at 59.02. I think our primary resistance line was up here, 59.10. I'd be content with 59.05 if we can get that much out of it. All right, well, in the meantime, we got to wait for a little bit of a pullback of sorts. Before I can get into another trade. We are seeing a little bit of a test of the extreme here, aren't we? We are seeing the market retest the high. Yeah, see, there's the soft edge sell. So here is a counter trend opportunity for you now. Remember, counter trend trades develop when you have a trend and then you have a test of the extreme. In the case of the Raptor, it's also going to develop when the band gets a little bit broader. I'm not sure this is actually going to be wide enough, but the hard edge of the trading band becomes your profit objective. And you can see that's how we're setting up here. I also recommend, if you are going to take a counter trend position, that rather than go in for your full risk exposure, maybe switch here to manual mode where you can just throw a single trade on it because it is counter trend. You know, the odds are against you on a counter trend trade. are seeing a little bit of a jumbled miss. And once again, you can see the issue with trying to do a counter trend trade. Now, that's why I said you put in a smaller position. The thing with counter trend trades is it's a trade-off. You trade off smaller risk for a lower probability outcome. And now we're producing yet another number 2 signal. So there is a chance here that we will see the market give us a little bit of a pullback. Got a chance to do this number 2 signal now on a second push entry, and they broke through the highs and failed, so maybe we'll give this one a try. We'll look to short them below 58.95. But like I said, if you're going to take this type of trade, you pretty much got to consider this gone. That's got to be an amount that you're comfortable with. And they're holding that zone pretty well, so I may even choose to enter below this swing low. It's only another tick, so maybe I'll enter below there. So what I'm doing now is I'm trying to take advantage of the counter trend signal. That's the number 2 signal, and look for a move back toward the hard edge. I may have to adjust my profit objectives. Okay. All right, we should see the market try to, well, it's going to at least challenge the median line here. It should get to the hard edge. That's where I have my break even. The next support line, way down here, 58.75 half, that would be a rather substantial move. I'm not sure we're going to see that much out of it on this leg, but maybe 58.85. I'm going to be content with my profit objective should I get it here. Come on. Get down there, you stinker. You can see they're only a couple of ticks above my break-even trigger. And what the market is doing now is it's trying to decide whether it's going to resume the downtrend or the uptrend. Come on, get down there. Stinkers. Okay, I'm going to move my break even to the low of this bar. If it makes one more push lower, I'll be happy to take a break even. In fact, if it gets anywhere close to that, I'll take a break even, because the danger is that it's going to try to make a double top here. And I'm not sure I want to hang around for that. Although at the moment, I don't have much of a choice. Yeah, good question here from Rick. Rick's asking, does the long wick at the bottom of the candle tell you anything about the market. That's a nice thing about the mean Renko bars from Indicator Warehouse. They have the power of a range style bar in that they show you the swings, highs and lows very clearly. You can see very plainly that, here we're making higher swings, the buyers are in control. But they also have the added sensitivity of a candlestick chart where we have these wicks and tails on each of the charts. So we can see when the market is starting to struggle as well. So when we're getting at these highs and we're producing all these wicks, and they're long wicks as well. So we know at one time the market did tick up to here to 5903 quarter before getting knocked down. So yes, it's always going to occur at a turning point. But I do keep a lookout for those wicks and tails to give me an idea which way the market might be leaning. Okay, things slowing here somewhat. And we should see the sellers make another push to the downside, and then it's really going to be a tug of war. Who's going to take over? Pretty influential bar we got going on here. We can see there's quite a bit of activity there. Come on, sellers, where'd you go? All right. So now we're getting that turn again, this retest of the high. We're producing a warning dot that a buy signal may be coming along here, but if we get another sell signal, we should see prices tail off somewhat. Yeah, maybe Rick says at 10:52 it was a sideways bar. Could that help any? Yeah, maybe. I try not to predict what the market will do next. Rather, I try to react to what it is doing. Okay, here they come. Now, if you wanted to take a little bit of risk out of the trade, you could certainly roll above the high here at 59.02. You may even choose to use a more aggressive stop strategy, maybe something like the parabolics. No, oh yeah, parabolics are up here now. Okay, grab that break even trigger. Oh, okay, I'm going to force the trade to break even because I can't stand it. There we go. We finally hit the break even. Get on down there to the profit target. Good question here from Rick. Rick asks, if I study candlestick reading, how much of that knowledge will help when mixing Renko with candlestick data like Indicator Warehouse uses in its programming? None. It will not help you one bit. You're always going to get an engulfing pattern when the market turns, but that doesn't always mean the signal will be a high probability signal. The thing with candlestick charts, like most things trading related, they always seem to work better in hindsight. Here, just a moment, I'll build a candlestick chart so everybody can see. Oh, they tapped me at break even again. Doggone it. All right. Let's build ourselves a 5-minute Nasdaq chart. Okay. So candlestick charts are great because they show you very plainly a lot of data, right? They're perhaps a little bit easier to read than a line chart or a bar chart, even though the same data is displayed. The nice thing about the candlestick chart is this bar right here is very, very bullish, right? It started down here, it finished up here. It was a very strong bar. You know this bar is looking very, very bullish because it's got this long tail to it. In that sense, candlestick charts are fine. You're even okay looking at things like engulfing patterns, like right here. That's a pretty basic pattern, an engulfing pattern. You get the opposite of an engulfing pattern, which is called a harami pattern. And notice how I'm cherry picking all these instances. There are other harami patterns that did not get much of a follow through. For instance, right here. Now, if you had kept a reasonable stop, even this trade right here would have worked out. The point is, and a very good friend of mine years ago, Tom Loge, he had a close friend who was a physics professor or something like that, a brainiac at any rate. And he had Japanese ancestry, and he was very familiar with candlestick chartings. He said Westerners will not understand candlestick charting because the context of a candlestick chart is rooted in Japanese culture. If you don't understand the culture, the formations, while you may be able to spot a morning star pattern or a golfing pattern or an abandoned baby pattern or three soldiers pattern, whatever. If you don't understand the context of the chart, the formation is going to fail. It's not going to follow through the way that you expect it to. And this is something that I go through all the time in the trading room as well. I've mentioned this before, that so many people structure their charts that this is what they're looking at. Quite literally, I have people send me screenshots of their chart and they'll say, well, hey Eric, how come this trade here didn't work out? What did I do wrong? Well, for starters, you totally ignored the left side of your chart. You cannot trade in a vacuum. Trading is always done in context. You have to, this is why when you look at a counter trend opportunity, you cannot simply say, oh, I have a counter trend trade. I had better trade short, trade against the trend. Okay, are you sure you want to do that? Is the band really fully extended? No. Do we have a reasonably strong uptrend? Yeah. Does that mean it's not a valid signal? No, of course it's a valid signal, but it may not be a signal that you want to go crazy on. Here, even though this one didn't trigger, this was a better counter trend signal. We had a nice trend. We had a rather extended band. We had a small test at the extreme, and we had a sell signal print. The reason this one did not print a number 2 signal, I don't know. Somewhere in the programming parameters, something, a requirement was not met, and it did not print a number 2 signal, but it was still a number 2, came down nicely to the hard edge, and then went, and did its thing. Same thing here with this counter trend signal. Note how the band is very extended. This tells us that we have a very oversold market. The wider this band gets, the more lopsided the market will be, and the more susceptible to a retracement it will be. So you cannot trade out of context. You always have to take the left side of the chart into consideration. In some ways, this whole section of the chart here is more important than what's going on right here. And I've mentioned this before as well, but when you're trading, you don't make more money by trading more often. You make more money by finding a high probability opportunity and then leveraging yourself correctly against it. So let's say we really, really like this number 3 signal. It's a double pullback. Yeah, okay, everything is looking good. We go in there. Oop, I'm still in manual mode. We go in here and we say, okay, I can afford to take 2 contracts on this trade, given my account size. This is how you leverage yourself correctly so that when you hit your profit objective, I should change this to 100%. So when you hit your profit objective, you have maximized your earnings. If the trade does not work out, you have contained your losses. You have restricted your losses to only 2% of your capital. This is very important. This is going to make or break you as a trader. So if you do this type of trading, you only need to trade 2 or maybe 3 times a day. So what does that do? Well, that frees you up a lot from chasing every single signal. That allows you to focus on what appears to be the best looking opportunities, right? If you know you're only going to trade 2 times a day, let's use the extreme. You're only going to trade 2 times today. Does that mean you need to take all of these signals? Does that mean you need to take the first 2 signals? No. That means you can stand back. If the market looks like it's moving sideways, you're getting a lot of yellow bars, you're getting a lot of congestion, you don't really know which way the market's going to go, then wait. Wait until you get a more promising looking setup. And let's say right now you figure, oh, okay, it looks like the market has stalled. Maybe I'll try to short it. Boom. Okay, hit my first profit target, $200. Okay, great. So I've got $200 in the bank. I need 1 more trade today. That takes a lot of pressure off, trying to chase trades that don't look all that promising. Today is not the best day to use as an example because we've had a lot of choppy type trading going on. But the point is, get used to looking for high probability signals. Get out of that production line mentality that afflicts so many traders. They think, oh, if I just trade more, I'll make more money. No, you won't. And there's probably some candlestick pattern in here that you can point to and say, aha, it was a so-and-so, and that's why the market is going down. But again, just like most things trading related, it's much easier to do in hindsight than it is in real time. Candlesticks, like I say, they're great they give you a very good visual. You can run, if you're used to running a 5-minute chart, Keep a 5-minute chart next door to your Raptor chart. Oops. So that you get the visual. You can say, yeah, okay, right, there was a big run up. Looks like there's a little bit of support down here maybe. But here too, I'll just interject. If you're going to add anything to the DTS system or the Raptor system, make sure that it's something that helps you make a decision. If it does not help you make a decision, then get rid of it, because chances are it's only going to end up confusing you. Trading is not what most people think. All traders, and I do mean all traders, I don't care if you are Paul Tudor Jones or Warren Buffett or Ed Sequoia or whoever. Well, actually, everybody says Warren Buffett's an investor, but we'll throw them in the mix anyhow. Name any successful trader / investor you want. There is one thing that is in common with everybody, including you. You will never have all the pieces to the trading puzzle. You are always making a decision based on the best available information, of which there is never enough of. But we formulate our trades, we make our best guesses, and then we take a leap and we control our risk so that if the trade is wrong, then we haven't blown ourselves up, right? This is an amount I can afford to lose. For you, it may be more, it may be less. But so long as this amount is something we can afford to lose, in the long run, we'll come out ahead of the game. People run into problems when they risk too much money. And that's the beauty of the trade manager, is it caps your risk exposure while maximizing your potential profitability. And that is huge. Rick says, where can I go to listen to this again? You can, the videos will be posted at the Indicator Warehouse YouTube channel. And if you go to YouTube, so we'll go YouTube. Ooh, if I could spell. And you search, stop it. If you search Indicator Warehouse, you'll get the Indicator Warehouse channel. And there you got Adam's lovely mug in the way there. If you subscribe to this, you'll get notice of the videos, or you'll just have the shortcut to the videos, and they're posted daily. So this one will be up in a couple of hours, and you can go review it. Yesterday, I think, was kind of boring. You don't need to watch that one. All right, boys and girls, we're going to wrap up shop here for the morning. If you're going to continue trading this afternoon, we got ourselves a real mixed bag here this morning. A big overnight drawdown and a pushback during the day. If I had to choose one way or the other, I'm going to say we're going to see a little bit of a pushback by the sellers. And it may end up moving the market into more of a sideways trading range today. So short term, bullish, or pardon me, bearish. Longer term, for the remainder of the day, I think you can expect more sideways trading. All right, we'll talk to you tomorrow then. Bye for now.